welcome to The Pulse, Roger Yates. Thank you very much for joining us today. Now, you only joined this business back in January after a long and successful career at Henderson. What made you decide to take up this job?
Well, I love the investment business. I had a good break after my time at Henderson. And really, I was looking for a business where you can help it. I was interested in working in Europe, which I think is a very undeveloped market from an asset management point of view. And I was ready to start again after 12 months out.
Now, it is a very interesting time for this company. UniCredit's CEO has said that Pioneer is looking for a partner. What's the thinking behind that? Why?
Well, look, Pioneer is a good business. It's a strong business. It's growing. It's extremely profitable. But when you look out 3 to 5 years, the asset management business is changing. And the sort of products that our clients need, the sort of markets we want to operate in, are different from the positions we have today. Now, we could solve all those issues over time on our own, under our own steam, or we can think strategically about partnerships which will help us to get there faster. And that's what we're doing.
Now, it must be a fairly tricky job to find the right partner. How far along that line are you?
Well, it's important to do a lot of preparation work to make sure we have the information available that we need to have discussions with partners. We've pretty much completed that work, so we're at the point now where we can consider all the options that are open to us. And I have to say, there's a lot of interest in the project that we're doing, and I suppose that's flattering in a way for Pioneer.
But you don't have a particular name in the frame right now?
No, not at all. The acid test is, can we look our clients in the eye and say, this is now a better business for you? Can we look our staff in the face and say, this is now a better company to work for? That's the acid test of whether we do the right thing or not.
And so what is it that you're missing? Are you looking for more emerging market exposure? That's what you're looking for, right?
Well, if you look at our business geographically, it's a powerhouse in Europe. We have a very strong US business and some very good niche positions in Eastern Europe, for example. We don't have Japan. Asia we're in, but we don't have critical mass. Australia we're not in. I mean, there's 3 of the world's 5 largest asset management markets. Right. And from a product point of view, we need greater critical mass in real estate, in absolute return products, and so on. Now, as I say, we can do these things on our own, but if we can move faster, we should.
Has it been difficult? Because always in these periods of change, when you're not quite sure, when indeed your clients are not quite sure exactly who that perfect partner is going to be and what that's going to mean, as a CEO, how do you keep the staff motivated and how do you keep the clients happy in that kind of period of change?
That's a good question. The first thing to say is, deals in the asset management arena are nothing new to clients. They've seen them many over years. But the most important point is transparency. That's why we announced this strategic review when we did and the way we did, because I want to be able to front up to clients and the staff and be completely open about what we're doing. And we've had a terrific reaction from clients because we've been so open.
Just before you go, it's a very big weekend with the jobless figures coming out from the US. How do you think that we are positioned for that global recovery and also the issues, particularly in the US?
Whatever the payroll data says, the fact is that it looks like a very anemic recovery. In most major economies, including the US, consumer spending is the biggest part of GDP. Every which way you look at the consumer, it looks like there's a headwind facing them. So for the life of me, I find it very difficult to see why anyone would be bullish about the economy. That's a very different thing to what happens in the stock market, of course, but I think our central expectation would be, for the next couple of years, really pretty weak data.
Okay. Roger Yates, thank you very much indeed for joining us today. Thank you.